investment coach and founder of Sage Investors, and I'm here to get you in the loop about what's going on in the markets, about all things investing in the world of stocks and ETFs. So, have you got your stimmie check yet? Chances are it's in the mail, it's on the way, and you're going to have it. I'm talking to my friends down south here about this. And chances are, if you're going to get it, if history isn't any indication, that money is going to get spent. We've seen traces and inklings of it in some of the recent retail sales data, which were posted a couple of days ago, and showing retail sales have been going quite well. And some of the recent earnings that have come out by some of the companies, Walmart just reported today, with strong late year-end sales. It's interesting to note that if you go into some of the micro-frequency data, daily data in terms of transactions and things like that, you'll see a bit of a twist off in terms of the middle and lower incomes are spending spending quite a bit, while it's the high net worth folks that are kind of holding their money and saving it, and it's growing, and there's a lot of cash balances out there. So it's kind of telling me that there's a potential out there for a bit of a powder keg of some unleashed euphoria that might come on as the year goes along, and that might play into some of these luxury retail stocks. The thing that's kind of a little bit weird about it is a lot of the low-hanging fruit with these retail stocks have kind of been picked through. If you look at companies like, you look at Walmart's and the discounted retailers, the Ross stores, the Big Lots, they've had big moves already, so they've been kind of low-hanging fruit. The luxury retailers, just the same. If you look at companies like Nordstrom, Tapestry, these were stocks that were trading at about $13, $14, like literally 6-7 months ago, and now are like trading in the mid-30s. Do they have more upswing in them, given that we're going to see more stimulus come into play and we might see some unleashing of spending power? That's something we're going to see. Some other interesting notes that I've picked up on: cash. When we're talking about cash, the amount of people, when you're looking at portfolios, investment portfolios, they're extremely low on cash. It's at some of the lowest ratios in a long time. And again, this is driven by this whole TINA/FOMO market we're in, where interest rates are near at zero, and what are the alternatives to get yield? So people are throwing their money, they're staying out of cash, and they're putting their money to work and pick any investment vehicle out there. It's interesting also to know that the sentiment is very, very much giddy. If you look at, I just posted one of these recent Bank of America surveys, and almost 14% of survey respondents indicated that we're in a bubble, while almost 50% of respondents indicated we're kind of in the late stages, but we're getting close to a bubble, but we're still in the late stages. So there's a lot of sentiment out there that this thing has legs. As much as you, again, pick any data point that can show you the market's overvalued, a lot of investors the sentiment out there and the psychology out there seems to be that, stocks and Bitcoin and cryptocurrencies are the game, or the only game in town, and that's where we need to pile our money. So that's interesting, because then you have the dichotomy that I've been talking about, this paradox where we have bond yields going up. And so when you look at some of what's driving those bond yields going up, well, it could be the price of stuff. Commodity prices have been surging. The CRB index has been surging. And if you look at now where people are allocating, they're reinvesting their money, they're now swinging stuff into the commodity space. The investment in commodity related securities it's booming. Again, part of it is just because the natural fact of, hey, prices are going up, supplies are limited with respect to the basic necessities, the basic goods. And then there's this also, you can't fight the Fed, and there is no other alternative. So it's a very, very strange and it's strange. It's a strange market, and somebody here who teaches people how to make investment decisions, a lot of times it's the things that I usually kind of rely on the principles and the data points and the indicators. They're kind of saying one thing, but the market is behaving the other thing. At some point, something has to happen. So that's all I got for you today. If you're interested in more insights in terms of investing, you can go to my website, sageinvestors.ca. You can follow me on Twitter. My handle is @sageinvestors. And also, if you're interested in any of the online courses and in-person courses that I do teach on investing, you can catch me out on my website again, sageinvestors.ca. So hopefully I've got you in the loop a little bit about what's going on in the markets. Thanks for listening in, and stay safe and good luck, and obviously do your homework before you make any investment decision. Thanks, bye.